So here we are, chapter 9. All right, so we are dealing with petty cash. Well, this is just cash in general. All right, so first off, we're going to introduce you to what cash, credit cards, and what checks are. Okay, so cash is, of course, what we use to exchange for a good or service, right? And in the US, we use the US dollar, right? It's pretty flexible, the US dollar. It's pretty standard towards every single country, right? We use, if not, the US dollar has prevailed and is part of one of the most easiest form of currency to use to exchange for a good or service, all right? So, of course, cash is just cash. It's the most easy and it's the most readily available type of cash, right? It's instant, it's immediate, right? Then we have another type of form of cash, right? It's called a check. But how checks work is it's not as easily and readily available as it is for cash, right? Because two things that need to happen, right? You obviously need to have someone's name in order to write out a check, right? To write to who. But a check is also going to include your account number and whatnot. But the most important thing is the date. If you set the date out for later on in advance, maybe in the future, you are unable to collect the money until the day has come. So that's a little, what do you call it? Barrier towards a check. Checks are not readily available like it is for cash. Checking, another thing too, is it comes directly out of your bank account. And if you don't have enough money in your bank account, what do you know? You're going to get slammed with a non-sufficient funds, and then we'll talk about that in chapter 10. But yes, we will come into conclusions where we might not have enough money in our bank to even support whatever our check is written out for. So here's a check. You've written checks before in your lifetime, I'm pretty sure. Basic things that you need is obviously the person's name, the amount written out in English. You also have to have the dollar amount written out as well as the date and a signature. So those are the components that makes a check valid. All right, and again, depending on who you send it to or who's receiving on the other end, also things to know about a check too is when you receive a check, I believe you have an expiration date. So I believe the longest you can hold on to a check could be about anywhere between 3 months to 6 months. Okay. I wouldn't know why someone would hold that check, but when we talk about in chapter 10, when we do bank reconciliations, we'll understand that when we write our checks out, that doesn't mean the business is going to, on the receiving end, the business is not going to always deposit it right away. So that's also given here as well. And you never want to write a check out the day of unless you for surely know that, let's say you're in the store and you write a check, you obviously have to write the check valid for that day. But oftentimes when you do paychecks, things like that, you need to do a date that's a little in advance or when the proper day to have, all your priorities, straightened out, all your affairs lined up, right? You have enough money for people to go ahead and take, to cash out their checks. So those are the few things that are good and bad about a check. Good thing is, it's another source of payment. It's another source of cash. However, the downside is you might not be able to collect the cash it out, or you may not be able to convert it into cash immediately, right? So of course, with the new generation these days, we learned to use invisible money, all right? Also known as a credit card, right? Now with this, there are a few things that you should know when it comes to dealing with credit cards. All right. When you're working with a credit card company, whether it's Visa, MasterCard, Discover, or even American Express, right? They have a little interest that is collected based upon your sales, right? It could be anywhere from 0.5% to even 3%. And usually these credit cards, they charge you a percentage or a fee because they're collecting the money from you right away. Okay, so in this kind of sense, it is similar to instant money, all right? Because it's invisible, right? It's an electronic transfer in some kind of way, right? We're using plastic money to calculate as if you were to pay already. So when a transaction happens and you use a credit card, the transaction is paid already. It's paid for you in advance. However, when you go home, the one thing that you're going to be looking at is your credit card bill. And on your end, if you're the person who charged the credit card or the credit card owner, you can be charged up to anywhere from 15 to 30%. And that's a lot, especially nowadays with, with society. And we have, consumer power, we have buyer power, and we have the, world of credit cards. Everyone owes everyone a lot of money, especially the credit card companies. They are the ones that are charging the most interest, all right? And they are collecting it every month. So, of course, if you have a credit card, you are very, very, very aware that every time you spend your credit card and you don't pay it back, you're gonna get slammed with 22, anywhere from 15 to 30% interest, and that's per year. All right, so it's an annual rate. But think about it: if you owe 30%, divide that amongst 12 months. How much percent are you actually being charged every single month? You're probably going to be charged a lot, and on top of that, you're being accrued interest. So when we talk about in chapter 10, we're going to realize how to accrue interest. And this, all right, so everything, you see how everything is just pulling everything in together. So we're going to be looking at how to deal with checks, how to deal with credit cards, right? And again, if you are the person that is allowing customers to charge with their credit cards, you also have to pay an additional portion of your sales because they've collected the money for you and they paid it in advance. So of course, with credit cards, it's fun, it's dangerous, and that is an easier way to be able to use buyer power, right? Be able to charge your credit card to buy and purchase the goods and services, all right? Now, with that being said, there is one thing that we forget that often happens a lot. We often forget that you can also have a petty cash fund. All right, so we have three sources so far of transactions, right? We have our cash, we have our check, and we have credit cards. Now, this time, we're going to be talking about petty cash and what petty cash can do, okay? If you're in a business, right, and you have minor expenses or something happened and you need some emergency cash to be able to pay for those minor expenses. So instead of having cash that comes right out of your pocket, which is a no-no, right, because that's mixing personal with your business, you're using your personal cash to pay for a business transaction. That's a big no-no right there, all right? Yes, you can be reimbursed for it, and we'll talk about that in a second. Second thing is, obviously, if you're going to write a check, it needs to be the business check, the business checkbook. It can't be your personal checkbook. Same thing with the credit card. It needs to be a business credit card. Now, all of those, if you don't have any of it, then it is also good to have a petty cash fund. So again, a petty cash fund is basically emergency cash that's set away in a lockbox. And what happens is that what people do is if they need to make a minor expense, let's say, for example, the school, right? Oftentimes we're printing left and right. We're printing lots of paper for the sake of, making pamphlets, printing out test results. We're constantly printing lots and lots and lots of paper. So oftentimes what happens is that someone needs to go run to Office Max or Staples, some place nearby to pick up a ream of paper or even a box of paper, right? And when that happens, then the minor, instead of asking the boss for money all the time, or whatchamacallit, instead of asking the boss for money, you have a little lockbox that you record and take out the money. The only catch is that when you come back to the lockbox, you have to return the actual receipt validating that the transaction is, and you have to put in the exact change into the lockbox. So that's what a petty cash fund is. It's basically a box for emergency cash to do minor business expenses. So with that being said, there are a couple characteristics of what a petty cash fund should look like. Obviously, you need a physical lockbox, something that has a key and a lock on it. You can't have emergency money wide open up in the area, right? It has to be locked away, all right? So typical things that you actually would see would be a cash register, right? Normally they have a lock on it, right? And you can lock it away so no one can open it up, okay? Second thing is you need to create a ledger account. And we'll talk about that when we move into the general ledger, when we actually go into the fictitious business. So that is a characteristic that you need to have. You need to have a ledger account so that you can be able to establish a petty cash fund, but you can also either increase it, decrease it, or you can close it out. And that's exactly what you need the ledger for, right? Again, it's for minor expenses. Yes, you can do for reimbursing checks or even reimbursements itself. So for example, someone needs to go buy that ream of paper. They go out, they spend their own personal credit card, and they come back to you with the receipt of the exact amount. What you can do is you can take that receipt and then give them the cash for that minor expense. All right, so that's one way you can do it. You could do a reimbursement check for that. Another thing too is you can, again, if you have a business credit card, or if you do have a business credit card, you can place it into the petty cash fund, right? That way it's recorded as is, because every time you log in, or you log that you're going to borrow the business credit card to go buy, let's say, a meal for a party, you may do so. And you don't need to know how much. You don't need to take $200 and expect that, it was $205, right? With a business credit card, you have a pretty much unlimited source of amount that you can spend, right? So with that, you can utilize that for a business credit card. Other things too is usually it should be filled with cash and cash receipts, right? So with that being said, the first thing is, how do you even establish a petty cash fund? Once you have the two characteristics, which is having a proper lockbox, and you've created a ledger account, then this is where you can go ahead and establish a petty cash fund. So in order to do that, you first need to speak with the manager or the business or the boss of the company, right? And discuss to see how much minor expenses you accumulate every month, or maybe what are some expectations or some predictions of expenses that you may incur in the future, such as, we were printing all the time. We need to make sure we have enough money for, printer ink, paper, things like that. Okay. So once you establish a certain amount, what you're going to do is you're going to journalize this in the transaction, okay? And how you're going to do it is you're going to create the ledger account, and you're going to debit your petty cash fund, all right? So petty cash, debit petty cash. And the second thing is you're going to either, one, write a check to the person who's in charge of the petty cash fund. And what they're going to do is they're going to go to the bank, cash it out, and place that money into the petty cash fund. Okay? That's the proper way of doing it. Now, what you can do is the boss can go to the bank, because they're the one that have access to their own bank account, to the business bank account. They can pull the money, and they can drop it into the petty cash fund. That is also another one you can do. Okay? Now, you obviously shouldn't do this. You shouldn't be like, well, my petty cash drawer is going to be my junk change. No, I'm not going to dump all or whatever cash I have in my pocket and just dump it into the petty cash fund. No, realistically, that's not a good way to store your money. All right? So for this example here, on January 5th, you establish a petty cash fund for $500. So here you go. I put the date. Here you go. I debit my petty cash fund. And second thing is I wrote a check to my petty cash fund to go get it cashed out for $500. Right? And that's just how to establish it. Okay? Now, what happens when you need to increase it? Let's say my expenses were just too much this month. And I decide that I talk to my manager and we agree that the petty cash fund needs to be increased. Once you've figured out how much it needs to be decreased, right? And I need a grand total of $750 in my petty cash fund. So I'm going to increase it by $250. So in order to do that, you're going to do the same thing. You're going to increase your petty cash fund by debiting it, and you're going to decrease it by decreasing the checking because you're putting your own money into the petty cash fund, right? So that's how you increase it. And then lastly, the one thing that a lot of people get confused is how to replenish a petty cash fund. Okay, so the question is, well, how do you spend the money first off? And how do you replenish it? Well, it's pretty straightforward, like I explained earlier, right? If you need to go make a minor expense, what you need to do is you need to go to the petty cash fund. You need to go, whoever's in charge of the petty cash fund is going to record your name. They're going to record the amount that you took out, and they expect you to come back to them. Give them the receipt as well as the exact change so they can place it back and log it into the petty cash log. Okay? And that's how you spend the petty cash fund. Okay? So at the end of the month or at the end of the day, whatever way you're counting it, your drawer should be consisting of either cash and receipts, totaling the amount that you established the petty cash fund for. Okay? Does that make sense? Well, you've done petty cash before, so you know exactly how this is. Okay? So here's a rule of thumb. When you are spending the money, you are not going to ever record your transaction. You're not going to journalize it. You're not going to journalize it until you replenish your petty cash fund, okay? So often mistakes that students do is, oh, I'm taking money out of my petty cash fund, so I'm going to credit my petty cash and I'm going to make my minor expense. No, that is wrong. You do not do that. That's incorrect. How the petty cash fund will remain the same amount until you either decide to decrease the petty cash fund, like lower its amount in it, or you completely close it out completely. Get rid of the petty cash fund. So you never ever utilize, or when you journal or have a transaction happen, you never use the petty cash account. Okay? You only record the minor expenses and you reimburse the number of the total receipt number, and then go ahead and place back that exact money back into the petty cash fund. Okay? So let's go ahead and look at this example here. So this is how I'm going to replenish my petty cash fund. So here is a list of all the items that I utilize the petty cash fund for. I bought office supplies, so I have to ignore the expense. I had a delivery fee. I had business supplies expense. I had party supplies expense. I had to buy coffee for a meeting. And I also had to buy postage stamps, right? So in my lockbox, I should have a total of $750 in grand total, right? But here, I also, so I had, actually, I think it says here, I started with 250, right? So in my total receipts right here that I've made my minor expenses for, it totaled up to be $178. Okay? Now, what I do here is, because right now my petty cash fund is for $250, if I've already spent $178 worth of supplies and postage stamps and whatnot, right? So that means I have my total number of receipts in there, and I have the leftover remaining cash. Okay? And no matter where I'm at in any given point in time, when I take the money out or I enter in money in there, it should equal the value of what you establish your petty cash fund for. So in this case, I believe it was supposed to be, I wrote increased petty cash fund by 250. So so the assumption is, because we don't have the general ledger, the assumption is my current petty cash should be $750, right? Because I established it for $500, now I increased it for $250. So $750 is what I'm supposed to have in my petty cash fund, but because of the month of February, I made all these minor expenses. So in order to reimburse or replenish my petty cash fund, I'm going to calculate the total amount of receipts, and I'm either going to write a check to the petty cash fund or to the manager of the petty cash fund to go to the bank, cash it out, and place that money back into the petty cash fund. So no matter what given point in time, whether you have receipts or cash, your box should be for whatever amount you established it to be. Okay? Any questions?
No, none yet.
Okay, good. So then, again, let's say in March or June, all right, I decide to just close out my petty cash fund, okay? Because I don't need to use it. I got a business credit card or whatever reason it is, I'm going to close out my petty cash fund. So with that being said, the only way to close out your petty cash fund is to just credit your petty cash fund and zero it out, okay? You're going to zero it out completely. And you're going to take out the money and either deposit into your checking or, I don't know, put it cash on hand or even pocket it. I know the owner can take it. It's their money. Okay? But in this case, most likely what you're going to do is you're going to either deposit all the cash that's in the petty cash fund and close it out by crediting the petty cash fund. Okay? Pretty straightforward. So you only utilize the petty cash account when you establish and when you increase, decrease, or close out. Never to do the actual transaction in between. All right? So with that, of course, I'm going to talk about shortage and cash overage. Now, oftentimes what they usually do is when you have a store or anything that has a cash register, usually the very first thing they do is before you open up the shop is you count the money in your register, right? You count how much money you're going to start with. And then once the day is over, you're gonna calculate all your receipts and you're going to calculate all of the money that you have in your cash register. And it's supposed to total up what you began with, right? It's supposed to match 100%. Now, oftentimes, a lot of times, customers, right, if it's like a couple cents or 10 cents even, or if they're running late, they'll be like, you can keep the cash. And then once you do that, then you have extra money in your drawer. Why? Because of that reason. Because some customers, they're like, don't worry about it. Keep the cash. Tip yourself. Whatever it is, right? They'll often do that. And that's why you'll have a cash overage. Now, what happens if, let's say, the owner was running late. They decided to just go into the cash register and just pull out $20. Then, at the end of the day, if the owner never told you that they took money out of the cash register, you're going to have a cash shortage. So this is exactly what we're going to talk about right here is, well, what happens when that happens? Well, pretty straightforward. You're going to have to, obviously, one, look for that discrepancy. But most cases, when you journalize it, is you're going to do again, you're going to calculate all of your receipts, and you're going to total it against how much you establish your petty cash for. So for this example here, on June 1st, you establish a petty cash fund for $600. Okay? And then on June 30th, you need to replenish the petty cash fund. And then this is what happened. So the total receipts came out to be $590, and you had no cash left remaining in the petty cash fund. So here you've used $590 worth of the $600 petty cash fund. But what happened to the extra $10? That's where when you journalize it, you're going to journalize it as a cash shortage or overage. In this case, they're one in the same account. So we just utilize one account. We notice that we're short by $10, but you still need to reimburse it for the $600. So wherever that $10 went, you can't find it, you don't know who took it, you still have to assume that you established the petty cash fund at $600, so you have to reimburse the whole thing for $600. You cannot reimburse it for just the checks amount, because then your petty cash fund is still going to be short $10. So you're still going to have to reimburse it for the full $600 and recognize that you had a cash shortage. Okay? So that's scenario 1. Now here's scenario 2. Same thing. On June 1st, you establish a petty cash fund for $600. But then you needed to replenish the petty cash fund, and your total receipts came out to be $600, and you had $20 remaining in your cash, in your petty cash fund. So now we have too much money. We have exactly $600 in receipts, but why is it that I have $20 remaining? All right, so here, maybe someone they either took the money and then placed it back without letting anybody know, or they, maybe someone donated to it. I don't know. Something happened, but you ended up with $600 of expenditures and $20 left into the petty cash fund. So with that being said, you're going to total up your receipts, and then you're going to do a credit to your cash shortage because you have too much money now, right? You have $20 remaining, and then you're going to write a check for less amount, but totaling up to the $600, okay? So this one, we're recording that we have a cash shortage. However, it's just going to go right back into the petty cash fund, okay? And that's how you record it. You're just going to record it for the less amount of check, okay? Because you already have $20 from the petty cash fund. That was just an overage. So with that being said, you will not be tested on this. However, it's just knowledge if you're going to use a petty cash fund, okay? So chapter review here. What is a petty cash fund? How to establish it, how to increase it, how to close it out, and again, how to replenish it. Again, so I'll repeat this again. You will never use the petty cash account unless you're establishing it, increasing it, decreasing it, or closing it out. But if you are spending the petty cash fund, you would never ever use the account, right? And again, pretty much that's all I want you to take away from chapter 9, is if you have one. And for our fictitious business, we will have a petty cash fund, and we will also have a cash register. Okay? So that's my best way to utilize this concept, by using a cash register. It's the easiest way to understand what you need to do especially when you establish something like that. So here we are at chapter 9, petty cash exercise here. All right. So number 1, here we are at, okay, so number 1, on January 10, you decided to establish a petty cash fund for a total of $250. Journalize.
so I would put the date of 10/1. The description is going to be petty cash
Petty cash is correct. Good. Where?
in the debit column
Debit
for
column.
250.
Hold on. Petty cash. Good. For 250.
Yeah.
Mm-hmm.
And then the next description is the checking. And it's
Checking.
going to be 250 in the credit column.
Good. All right, good. So the next one is number 2, February 12th. You took $20 from the petty cash fund to pay for party supplies. Yay, costing $18.57. How do you journalize this?
Okay. So with the date again of 1/12, and the description is going to be party supplies.
Party supplies.
Okay. And I'm going to debit, this is my opinion, the 1857 because I'm assuming I'm getting change back
Okay.
with the receipt, right? So the debit is $18.57.
Okay.
And then checking.
Checking. Okay. Now,
Oh, well, I'm doing it as if I'm at the end. So there would be no checking because you're going to keep tallying the drawer, right?
correct. So in this case, all right, in this case, you were doing good, but the assumption is I am not reimbursing my petty cash fund just yet. This is a transaction that happened on January 12th that I'm making. I pulled money out of the petty cash fund. All right, so the answer here is going to be no entry. This was a trick question.
Okay.
Okay, because again, a lot of my students would say you would credit your petty cash fund. In this case, there's no transaction here because we have to wait until the end, either the end of the month or whenever the petty cash drawer is low. So here, no entry is needed. Okay? A transaction has happened, right? We're not the petty cash manager, so we are not going to keep track of this receipt. It's whoever it is.
That's me. That's me in my mind because I was that person. I had to write down everything, whether it was
Good.
the end of the month or low or not. So, okay, that's where I was putting it. But here we're just journalizing.
Correct.
Journal only. Okay.
Good. Good.
No entry until end of the month or the funds are low and ready to be
Good.
replenished. Okay.
Okay, good. So number 3, on January 30th, you counted a total receipts in the amount of $179.65. Now it says replenish the petty cash fund.
Okay.
So in this case, we don't really have specifics, so just go ahead and use cash
Right, so-
receipts or some
Okay,
some kind of
I
expense.
put on the line total receipts, so yeah.
Good.
Because I was like, well, I'm just assuming these are several different receipts.
Mm-hmm.
Okay, so, and then I came up with, let's see, what was it?
It's already totaled.
Okay, oh. Yeah, the 170, so the total receipts is the 179.65.
179.65.
Okay, but I show, a shortage
Of what?
of, if I'm replenishing,
Mm-hmm.
right, so the 250 is what should be in the drawer, right?
Mhm.
179.65. I have a shortage of $70.35.
Well,
Am I right?
okay, so when we replenish the petty cash fund, right?
Uh-huh.
So we counted a total receipts of $179.69 with, I didn't say specifically how much cash you had left. So this is assuming that your petty cash drawer should be equal to the 250 that we established it from the very beginning.
Okay.
All right, so in this scenario, I'm very vague, and I'm just asking you to just replenish the petty cash fund. So how do you replenish a petty cash fund?
well, that is the total receipts, 179.65, and then with checking
Good.
for the same amount.
Good. We're not going to increase or do anything to our petty cash fund. We're leaving we're leaving it as is. All right? And we're reimbursing the total receipts with actual cash. So now our petty cash drawer fund, whatever it is, should be equal to $250.
Okay.
Okay? Good. All right. Now here again, we assume question 4 through 6 are not related to the previous questions. Okay? So that means this is completely new. So then on February 1st, you decided to establish your cash register to be a total of $500. So how are you going to do this?
Okay. Well, let's see. It's not going to be petty cash then, correct?
But it's going to be the
Is it going to
concept.
be cash? Is it cash register or cash on hand?
You can either or. I'm going to validate that as either or, but I'm going to go ahead and say cash register so then you know exactly where this cash is going and it's not just in your physical hand.
Okay.
So cash register, good. Or you could do cash in register.
Oh, all right.
Okay, good.
Okay, so it's the same. So that is a debit of 500.
Good.
Okay, and then checking.
Right, because we have to.
Take it out. Yeah. And that's 500 in credit.
Good. Good. Okay. Then on February 15th, at the end of the day, you counted a total of $156 worth of cash receipts and a total of $344 in the cash remaining in the cash register. So replenish the cash register. So here I'm a little more specific. I said that I have a total of this many receipts and I have a total of this much cash in my register.
Right. So, oops. Okay, so I have the date of 2/1, and then I have cash register.
Okay?
Okay, and then I'm gonna debit the 156.
Okay. 156. All right, but not cash register.
Oh. Is this petty cash?
This is not this is not petty cash.
Okay.
So,
All right, yeah. Oh, receipts.
yes, there you go. I was going to say I was going to try to find a way to explain it.
That's what I say. See, I have to read the question again because I read it too fast and I.
Yes.
So, receipts. Okay.
Good.
And then the one below is for checking
Yes.
for the same amount in the credit column, 156.
Yes. For 156. So, did I have a shortage or overage or did I have the exact amount?
Exact.
Good. So,
yeah.
no shortage and no overage here.
Right.
Good. So then on June 6th, February 28. Sorry, I was reading number 6. I was reading number 6. Okay, so on February 28th, you decided that you switched from a cash register to a credit card only transaction. So journalize the closing of the cash register.
Okay.
So I'm going from physical to digital.
Okay, so is there an amount? Is
What
it
did
the same amount for the last scenario?
so these are all related, right? So what did I establish my cash register as? How much money did I'm supposed to have in my cash register at all times? 500. So if I'm closing it out and I'm no longer ever having a cash register.
Oh, okay. So now you can put let's do the date, February 28th.
Mm-hmm.
And you're going to put, it's going to be, the description is checking.
Yes, you're going to deposit all the money in the cash into your bank.
Right. So the 500, right?
Mm-hmm. For the full
Then you're
500.
gonna put, and then the next description will be cash register.
Cash and register. Good. You're going to close it out by zeroing
close.
out the account
500, yep.
for the $500. Good. Good. All right, then we're going to answer a few little basic questions here. If you have established a petty cash fund for $200 at the end of the month, okay? You calculated a total receipts of 155.20 cents and cash to be $50, okay? You have a blank in the petty cash fund.
I have an overage.
We do have an overage. Yes, because we supposed to have $200, but because we counted $155 plus $50, that gives us $5.20 overage. Good. We have too much money in our petty cash fund. So then scenario number 8 is going to be if you establish a petty cash fund for $200 at the end of the month, you counted a total receipts for $150.54 and a total cash of $24.46. You have a blank in the petty cash fund.
You have a shortage.
Yes, you do. You're missing money. So you better go find that missing money. So you have a shortage. Good. So, all in all, this exact example here is it doesn't apply to every single business. Okay? So, whether you use a petty cash fund or whether you use a actual cash register, that's what I want you to teach you for chapter 9. The only thing I want you to get away from this entire chapter is how to be able to establish a petty cash fund, how to close out a petty cash fund, and how to reimburse a petty cash fund. Okay, and that's going to be on the exam.
Okay.
Okay, that's all you need to know.
That's how to establish, how to what? I'm sorry, I'm writing that.
How to close,
How to close.
and lastly, how to just reimburse or replenish.
Oh,
Okay, pretty straightforward. I don't need you to know anything about overage or shortage, but that's what you need. It's a little FYI. Okay.
Yep.
So that is it for chapter 9. Pretty easy peasy stuff.